hear about a couple of more interesting value stock picks now with Tracey Ryniec, our value stock strategist here at Zacks. So you said pickings are slim in the value category, eh?
They are.
Well, you managed to come up with a couple here, Aetna being one of them, AET.
Yep, I kind of warned that we'd be getting some insurance companies and other financials coming down because there are some of those that are still valued, and Aetna is one of them. They're one of the largest health insurers in the country. HMOs, PPOs. Interestingly, they did recently buy Coventry, which gives them a huge platform for the Medicare Advantage and the Medicaid type programs. So that is going to definitely boost the bottom line for them. They also are going to be part of these big insurance exchanges, these public exchanges that are going to be going on with Obamacare. And some of their management has said recently that they do see opportunities in that. They're still, like all the insurance companies, exploring what that's going to mean, but they are going to be partaking in some of that going forward. So that'll be a good thing to watch with these guys. Okay. It's Zacks number one. It's got the rising estimates. It's not like a crazy growth story, but it actually has decent earnings growth considering that it is an insurer. And I think it's because of some of these things I just mentioned.
Almost 13% this year?
Yeah, which is, it's nice to see double-digit earnings growth with an insurer, especially one that's been around this long. So that's impressive, and they're going to keep it up to some extent the next year too, probably like 9-10% or so. You can see the estimates are trickling higher here because the analysts do like what's going on with the Coventry deal and the exchanges and these other things. So yeah, the things are going well for the insurers right now. It's kind of an interesting place to be with Obamacare kind of sorting itself out and how a lot of these companies are going to benefit from it. You can see the chart. Everybody's been thinking the same thing I just said, that there's going to be some opportunities here. The shares are at 5-year highs, but it still has a lot of value, actually. It's trading around 10, 11 times. That's cheaper than the overall S&P, which is about 15 times. You do get a small little dividend here, too. So it's not a bad way to be in the health insurance market right now.
All right. What about IAC? It's a media company.
Yeah. This one, some people might be familiar with it based on its old name was Interactive Corp. This is Barry Diller's company.
Okay.
They own a whole bunch of brands, like 150 internet brands, a lot of which you and I would know, like Ask.com, About.com. I personally use Dictionary.com. They have a big dating segment. They own Match.com, which is one of the largest dating sites. And then some of the offshoots from that are Chemistry.com and OkCupid. I know you got to be heard some of these, Terry.
Oh, I've heard of them. Yeah. I'm waiting for you to tell me which ones you're using besides the dictionary one there, but we won't go there.
Yeah, we won't go there. But they do have HomeAdvisor.com too, which is kind of an interesting play because they think that might compete against Angie's List with people who are doing repairs and things like that. But there's a whole bunch of other media sites that they own. So they got a nice mix of places that everybody's going, and they use a combination of both ads and subscriptions to make their money. And they're pushing big into the mobile area because that's the next big thing. So you can get, Match.com on your phone.
Mobile device, absolutely.
Right, and Dictionary.com.
And why wouldn't you want to?
Right, of course you would. So you got all that going for it. It's also interesting, this is a growth play, which, I like to seek out the ones that are the growth plus the value. Yeah. So this is a great combination of both. Analysts expect a big jump in earnings this year, and you could see growth is supposed to climb about 85%. They beat this last quarter quite easily, so some things look, they're in a good position with the mobile expansion and these good name brands that they have. The chart is kind of interesting. It has rallied like everything else in 2013, but then it's kind of stalled out recently. So this is a good buying opportunity for those who are in the value space because it's pulled back a little bit, stalled out here. It's trading around 14 times, so it is within the value range. It's on a little bit of the higher end of what I like to look for, but I still do consider this a value. And if we get further market rally here, this is the kind of play you might want to be in if you're a value investor looking for that extra growth, which is harder for us to find. So
I would think that Barry doesn't have to worry about the field being too crowded since he owns most of the brands that come under this umbrella.
Well, right. Yeah, I mean, they're dominating with 150 brands, and they keep acquiring some of these small names. Mm-hmm. So, yeah, I mean, they have the name recognition, and, you know, they get over 1 billion views on all of their sites a month worldwide.
That's a lot of views.
Yes.
All right. Do you own either of these?
I do not.
All right. We have other stock picks for your consideration. They're on our website, Zacks.com. You can link to them right off the homepage if you're not there already watching this video. They change often, so check back frequently. With Tracey, I'm Terry Ruffalo.